Hello, welcome to European Open Briefing for Monday, July the 9th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we have that risk-on sentiment, that weak risk-on sentiment, which started on Friday, continuing into this week. It comes after we didn't see much developments on the trade front, even though those tariffs came into effect on Friday. We saw the US imposing tariffs and China imposing counter tariffs, but we're seeing a bit of recovery in equities. Asian indices are up for a second straight day this morning, and we've got a positive start in Europe as well. We also had the US jobs report, which although we saw a solid number of new jobs being created, wage growth remained subdued, so that further boosted risk sentiment. The pound is up this morning, despite the fact that we saw the resignation of the UK's Brexit Secretary earlier this morning. The pound is getting on the back of hopes that there will be a soft Brexit. The euro is also extending its gains. It's now trading around 1.1750, 1.1760 rather, against the US dollar. We had some positive German trade numbers earlier this morning. The Canadian dollar is trading near 3.5-week highs. We saw Canada releasing strong employment numbers on Friday, and we've got a Bank of Canada meeting coming up in a couple of days where a rate hike is expected. If we look at the Australian and New Zealand dollars, they're both up this morning, particularly the Aussie, which is up around 0.4% on the back of that improving risk appetite. Gold, though, is up despite the risk on. It's benefiting from the weaker US dollar. So let's now take a look at the main movers. We can see that gold, the best performer out of major commodities and currencies. Aussie dollar is up next, and at the bottom of the table we've got the dollar and Swiss franc, as well as oil prices, which are erasing some of their earlier gains from last week. If we now look at the dollar index in the 4-hour chart, we can see it's been drifting lower since the end of June. On Friday, we saw the US jobs report for June, which with the number of non-farm payrolls coming in above expectation, and we saw an upward revision to the prior figure. Despite all that, the wage growth was unchanged at 2.7% year-on-year. Expectations were for a slight pickup to 2.8%. So that led to a bit of a dip in 10-year Treasury yields, and that's been weighing on the greenback dollar index. Earlier hit a 3.5-week low of 93.78. Dollar yen is steady around 110.50. Now turning to the pound, because on Friday we had positive developments with the Theresa May's cabinet of senior ministers agreeing to proposals of a soft Brexit where the UK would maintain close alignment with EU rules. But earlier today, though, there was a surprise resignation by the Brexit Secretary David Davis because of his opposition to maintaining such close ties with EU rules. He wants a clean break for the UK after it leaves the EU. So we saw the pound opening with a gap higher before turning lower after Davis's resignation, but now pound has started to head higher again. It hit a 3.5-week high of 1.3326 earlier this morning. But if we do see more Brexiteers speaking up against May's plans of a soft Brexit and her leadership coming into question, we could see some volatility for sterling down the line. And a quick look at the Canadian dollar. We've got a Bank of Canada meeting coming up on Wednesday. The employment report on Friday boosted expectations that the Bank of Canada will raise interest rates on Wednesday. Although the jobs report wasn't fantastic, it was still fairly solid, in line with recent data. We're seeing USD CAD falling to 3.5-week lows, earlier touching 1.3067. And a quick look at today's economic calendar. It's going to be fairly quiet apart from the Eurozone Sentiment Index coming up shortly, as well as 2 speeches by Mario Draghi, the president. That's it from me. Thank you very much for watching and have a great day.